Hey guys, welcome back to Generous Lifestyle with me, Lyle Weber. I'm excited to have you with me today. In today's video, we are going to be talking about investing and why it's important that you are somebody that invests. So let's hop straight into today's video. Well, you might be saying, Lyle, I don't have any understanding of stocks and it's just too complicated. I'm not an investor. I never went to school. I never studied finance. Well, you don't need to be somebody that's gone to school in order to be an investor, if I may put it that way. But let's take one step back before we get to what investing actually is. I believe that there's three important categories that we need to discuss. Number one is going to be savings. Number two, speculation, which I think a lot of times people confuse with investing, and then what investing actually is. So savings is where you take a sum of cash and you take it to your local bank or your credit union or to your bank, and you set it aside in the safe place where they keep it for you and they pay you a little return. So you get this minimal return. And I believe savings accounts are important for short-term goals and also for your emergency fund. In fact, I've got two videos, one on how to determine what your emergency fund is, and I'll leave the link below, and then also how to determine where to put your money, where to save your money. So how to determine what's a good savings account. So generally, like I said, those are short-term. On the other hand, speculation is pretty much trading. It's where you are trying to time the market, where you're trying to buy low and sell high, where you're trying to find a gap in the market. So you've got some funds and I want to buy this stock and then sell it quickly so I can make a profit. And I think that's oftentimes when people think of investing, they think of the ability to pick a stock and then to sell it off quickly. And that's not the purpose. To me, that's speculation. That's hoping that you're going to beat the market in order to make a profit. And yes, there are people that have done that in the past and made lots of money. But I believe as people who are good stewards of the resources that God entrusts unto us, I believe that we need to be investors. And what an investment looks at, or an investor does, is they look at things from a long-term perspective. So I've got goals. I want to retire at some point in the future. I believe in the kingdom we don't actually retire, but I call it repurposement, because I believe that God always has a plan for me, whether I am 10 years old or whether I'm 100 years old. So just repurposing, but just from what people call as retirement, when you stop working, generally 65 years old. I believe that we need to be setting aside funds that we can continue the work that God has called us to do. So that might be a goal, that when you reach the age of retirement, that you've got funds set aside to be able to continue to at least maintain the level of lifestyle that you're living at the moment. The other goals that you might have is, let's say you want to buy a house in 5 years' time. So why put the money into a savings account and earn 1 to 2% where you could possibly put it in the market and you can make 7 to 10 to 12% depending on what you are investing in. Again, if you don't have a proper understanding of these things, go out and meet a financial advisor whose view on investing aligns with yours, who's got your best interest in mind, somebody who's a fiduciary. And I've actually got a video on things to consider when it comes to investing and what it is that you should be looking out in a financial advisor. Okay, so as I said, savings short term, speculation, trying to beat the market, and then investing looks at the long term. Something you might be wondering is investing not gambling? I don't think so. I believe that investing is where you take your resources and you're giving it either to an entity or in person to manage it, who in turn is going to generate some form of income for you. But it's a calculated sort of transaction. I'm not just going to give my money to somebody that hasn't proven themselves to be able to generate some form of income. Whereas gambling, on the other hand, is like I'm throwing money in the air and hoping that something's going to happen with it. Something else that you need to consider is that there are different types of assets that you can invest in. We've got stocks or shares, depending on where you come from. And what a stock is where you take your money and you buy a portion of a particular company. So let's say you are in the United States and you want to buy shares in Walmart or stock in Walmart stock. So when you buy that stock, you become a part owner of that particular corporation. In South Africa, let's say it's Pick n Pay. No affiliation to any of these companies, but just For an example purposes, I've chosen those two. So you're going to take your money, you're going to invest it in these companies, and you will benefit in two ways. Number one, capital appreciation. So the value of the stock actually appreciates, or it gets more, for lack of a better word. So let's say it's $5 today, and in 2 years' time, it's worth $5.50 or $10. So the value of your investment has increased. But not only that, you'll also earn a dividend on what you have invested. The next asset type we'll talk about is bonds. And what this pretty much is, and the best way for me to explain this is, you become the bank. So let's say it's a country or the local government in the place that you live in, or even a company. They need to raise funds for a particular project, and they go out looking for money, and they might issue bonds, and you are going to be the person that's going to lend money unto them. And what you normally get back in return for your investment is, yes, your capital. So let's say I put $1,000 in, I get 1,000 back, but also I get interest back on that investment, and that's normally for a fixed period of time. The next sort of asset that people could be investing in is commodities. So whether it's oil or gas or wheat, I know when you watch whether it's CNBC or one of these other news channels where they talk about the markets, and they say that the price of this commodity has gone up or gone down, that's where you're actually buying this particular commodities, like gold. And the price of those commodities are generally, a very high level, affected by the demand for those particular items. An example is, let's say there's a particular shortage of a particular type of commodity, let's say wheat for bread, the price of that might go up. So if you held on to this, or you bought it today, and in 2 weeks' time the price goes up because there's a shortage, you could then sell it off at a profit. The next type of asset class is going to be real estate. So you could either go out and buy a house, you could buy an investment property, which might be a second property, or investment properties where you could then rent it out to people and make income that way. You could also, if you don't want to be involved in the day-to-day, there's lots of trusts that you could set up to, or there are trusts that you could set up to where somebody could manage it for you. In fact, I've actually got a friend, and he's into property, and he started off by buying trailers in a trailer park, and eventually grew to buy another one and another one, and then he bought a whole trailer park, and then he bought some condominiums. And all this guy does is he has an investment company that manages the property for him, and one day a month, for 1 hour a month, he picks up the phone just to touch base with the property managers, just to find out how things are going, and he collects his money each month. But again, in that case, he's appointed people that can run the operation for him. Real estate, if you look at it even from a biblical perspective, people that make lots of money tend to buy real estate because real estate tends to appreciate, or it actually increases in value most of the time. Something that I want to point out to you at this point in time too is, so you might be saying, do I put all my money in real estate to go out and buy another house or houses or properties, or do I buy stocks? What do I do? There's a concept called risk tolerance. So what this basically looks at is, how much risk are you prepared to take on? Okay, so if I buy shares, let's say I buy a share in a particular company and put all my money into that share, there's a possibility I could lose everything if the company goes bankrupt. So that's more risky. But what you could do is, the old saying, don't put all your eggs into one basket, because if it falls, you could lose it all. They oftentimes talk about they being financial advisors, and people in the industry will tell you to diversify your portfolio. So your portfolio is the different types of assets that you own. So maybe having some of your assets in commodities, some of your assets in the form of bonds, some of your assets in the form of stock, and some in the form of property, and so on. So you're spreading your risk. So if something happens to one particular asset, you are generally covered in the other areas. So that's something called, that's linking your risk tolerance with diversification. So the more risky an investment is, the bigger the possible return that you could get. But if you're going to take all your money and you're going to put it into a risky investment, there's a chance you could lose it all. So how do we protect ourselves against that? We go and diversify our portfolio. So just to wrap things up real quickly, let's say you've got some extra cash available and you say, okay, cool, I want to invest. What do I do next? What's the next steps? So there's a few things you could do. You could either start off small and take some money and go online and use a robo-advisor. So you go into most investment companies' websites, and there's actually prompts. You log in and it'll ask you questions, and based off those questions that you answer, it will kind of guide you like to different options with regards to how and where you can invest your money. The next thing you could do is also you could contact a financial advisor, and again make sure that they are a fiduciary and somebody that's got your best interest in mind at all times, and have them manage your resources and make the investments on your behalf. One thing to point out with financial advisors is they are going to charge a fee. And I believe that people should be justly rewarded for what they are doing. These are professional people that are rendering you a service and helping you manage your resources and your wealth. So I believe that they should be paid. But just remember that there is a fee with that, or a higher fee generally going to a financial advisor compared to if you are going to do it yourself. And then the last way you could possibly do it is to open up your own online account with a brokerage, where you then in turn go and you invest money with them. And that could be either going online or using one of the apps in the States. They've got apps like Robinhood and Acorn, and there's a whole host of them. In South Africa, we've got Easy Equities. Not endorsing any of these, just mentioning that, but you could go out and do that. But again, only if you feel comfortable investing should you proceed and do it yourself. Speak to people that you know in the industry that can help guide you. But ultimately, guys, it's important to pray and to be led by God's Spirit. I'll leave you with this last comment. I remember a few years ago, I think it was 2008, with the recession that was about to happen. I was praying one day, and I just believe God showed me that there was a recession that was about to come. And as a result of that, I could pivot what I did with my resources, and I was protected from the recession. I heard of other people who made gains in that particular market because they were praying about what they needed to do with their investments. Their advisors were telling them to pull certain stocks or to pull their money out of certain stocks, but they just felt no peace to do so, and they ended up making more money in the midst of that time where people were losing money. So it's important to, yes, we listen to financial advisors, yes, we read up on the markets, but always know that God knows best. So you're starting out your journey investing, and it's going to get you into a place where the more you do this, the more comfortable you'll get with it. And I believe that as you listen to God's voice, He'll lead you with regards to making great financial decisions. And I believe that this will be a mechanism in which you can actually move from where you are today to where God wants you to go. If this video helped you guys, I ask you two things. Number one, if you could share this video with a friend or family member that you believe needs to know more about what investing is. And the second thing I ask you to do is, if you haven't subscribed yet, click subscribe today.